This fund outperformed the market consistently for decades. That $100 invested into it in 1988 would have left you in 2018 with almost $400 million.
And that is unfortunately completely false. Today we're going over the Medallion Fund, one of the most misunderstood, misquoted, and misinterpreted financial funds in the world.
Welcome back, everybody. The most successful moneymaker in modern finance, Jim Simons, has annual returns of his flagship fund, Medallion, that have actually outpaced those of Warren Buffett, George Soros, or Ray Dalio.
So today we're going to be going over what exactly the Renaissance firm is, what the Medallion Fund is it fake, is it real, and how do I make sense of such astronomical returns?
So let's get into it. This right here, this is the number that built the entire legend. 39%. And get this, that's their average annual return after they take out their massive fees. And they've kept that up for over 30 years. I mean, let's be super clear. This isn't just a good number. This number basically defies financial gravity. It is, and this isn't an exaggeration, the single greatest money-making machine in the history of modern finance.
Or at least it would be if the Medallion Fund was actually a compounding fund. But the thing is the Medallion Fund is not an investment fund. It is more akin to a high-margin software company. What do you mean, software company? They're a high-frequency trading firm. They make 40% a year annually. What are you talking about? Well, they don't actually invest. And the problem with calling them an investment firm or a hedge fund, the most successful, is they're not successful in any metric except for that annual return. Now, what I'm talking about is under every single metric when you're measuring the success of a hedge fund or an investment firm, the Medallion Fund actually falls flat. Their compounded annual growth rate is minuscule. And this is because people incorrectly take their annual rate and multiply it. When they don't grow, they can't compound because there's only so much profit to be made off of their algorithms. There's only so many market inefficiencies to compound off of. And so they only make a linear profit. There is no exponential gain. So even bonds over a long enough time frame will outperform the Medallion Fund. And so over the course of 8 years, Warren Buffett, even though they only make 20% a year, which is a staggering number compared to most investments, compared to the 40% the Medallion firm makes, it only takes 8 years for Buffett to catch up. And after 40 years of investing, which is a normal investment timeline, they've made over 1,000% more than the Medallion Fund. So the question is, what is the Medallion Fund good for? And the answer is, it's good at making money off of a set principle, which makes it very close and in fact almost identical to just a business. And I'm not saying they're a bad business, but that's what they are, a business. They take $10 billion of capital and they're able to generate about $6.6 billion gross income, $4 billion net. Sounds pretty standard. There's thousands of businesses that do that. Won't even break the top 100 in the S&P 500. And while they are a good business, very profitable, high gross income at like 66% gross, 40% net, that's all they are. And there's a dime a dozen. Calling them something akin to beating Warren Buffett, who has made more money in the past year than the Medallion Fund has made in its entirety of its existence, is criminal. And they're not even a great business. They're solid, but they're not growing. They're not growing at even the rate of inflation, which means if they're valued at a normal price to earnings of a terminal no growth business, they might be valued at 8 times earnings, which would put them at $40 billion market cap. I don't have the number off the top of my head, but that can't even be close to the top 100, probably barely even in the S&P 500, let alone comparing to the best investment fund of all time. That's where I want to leave you guys today. If a fund could genuinely make 66% a year on its money, it would own the world. Alrighty, super quick tangent on how I'm achieving those growth rates for you guys. So since a growth rate is a annualized compounding rate, it is exponential. We have to know what our timeline is. So over 60 years, $1 initial invested times 40%, which is how much we're making every year, means we're making 40 cents a year. Now that 40 cents doesn't grow, which is why it's linear. So we can multiply the 40 cents every year, which isn't growing, by 60 years, and realize that we've made $24 of profit over 60 years, which then means we're ending at $25. That's 2,500% return, right? Over 60 years? Sure. But the question is, what, times 2,500, 25 equals X to the 60th. And that X, because that's how you figure out, growth, actually only equals 1.055. And that's where we get our growth rate, the 5.5, which is 5.5% every year. I know you can't even read what I'm writing here, but you can hear what I'm saying. So that's our growth rate over 60 years. Of course, over a shorter timeline, the Medallion fund looks better. Over a single year, it's 40%. But with normal investing, say with Buffett, 1.2, that's 20% a year. You can just multiply this or take it to the exponent of however many years you want, and it will compound, exponentially. It just goes up and up and up to the heavens. Versus the Medallion fund doesn't do that. But people, when they're calculating, almost every finance channel I've ever seen talking about this fund treats it as if it's compound growth. It is not. There is no compound. There is no growth in this fund. And that is where the major problem comes with all these calculations. This fund is not investing.